Hi, I'm Josh Cadillac, and welcome to my podcast, Know Your Shit. I've been blessed to see great success, as well as seeing the bottom up close and personal in 2008. And if there's one lesson I've learned, is that if you want to have success and differentiate yourself from everyone else out there, you need to know your shit. As a successful real estate and crypto investor and an educator, it drives me insane that people do not immerse themselves in their craft. Everyone is so busy advertising and testing new sales techniques, they forget the most important thing, the product. Here I want to talk to the folks that got this right, the most successful people in the world in every industry. Bring them to you and find out what they learned in their business that made it great. When you listen to my podcast, you will know for sure that the topics and experts we have on have one thing in common. They know their shit. Hello, everybody, and welcome to Know Your Shit podcast, where our knowledge and pride in what we do drives us to be excellent. My name is Josh Cadillac, and once again, I'll be in the driver's seat for today's show as we learn how to stop just doing deals and start closing customers for life. We have a great show for you, and the reason it's a great show is because we have Ms. Parker Borofsky. Parker, thank you so much for being on here with us.
Thanks for having me. I'm excited.
It's totally our pleasure. So, Parker, why don't you tell us what it is you do?
So I am a couple things. I am a mortgage lender. We specialize though in empowering people to purchase and invest. So we focus on short-term rentals. We can also do long-term investment and primaries, but primarily our client base is short-term rentals. So we know the ins and outs of the guidelines and helping people go conventional, jumbo, or non-QM, whatever's needed to get them the best financing possible. And on a side note, I'm also an investor myself, owning 12 short-term rentals in a couple different markets. Been doing it since 2018. So that's what I do.
Awesome. What got you started doing that?
You know, it's funny. So I transitioned from timeshare marketing. I did that for about 10 years. And we moved to Tennessee. So we traveled around a little bit and moved to Tennessee. My husband got a job then at that point. So I was able to explore other avenues. And I really enjoyed, oddly enough, the closing on a home part of it. So I was really curious about both the real estate side and the mortgage lending side. It was kind of a full circle experience. I went to apply for a job as a loan originator and found out the owner of that company was actually the father of one of the vice presidents of Wyndham, where I was working in timeshare. So really a weird full circle story there. So that's how I got started lending. And then, I love the name of your podcast, Know Your Shit. I took off pretty fast because I really dug into the guidelines and more so than other people, and found that there's so many ways to accomplish so many things with different situations. And I think that's really what propelled me into this. So, and then,
that makes sense.
Yeah.
So what do you like?
I was going to say,
oh, go ahead. I'm sorry.
Yeah, no, that's okay. I was going to say what got me into the short-term rental side of things though was, because I think that's important too.
Sure.
So as I was able in discovering how to kind of overcome these complex situations for lending, that's where I kind of segued in. I met Avery Carl. She's with the short-term shop. And as she and her husband started navigating buying short-term rentals, I was their lender. And then as she grew that and more people got interested, that was where all the growth came in. And so just being able to do those deals is where we got started. And then, of course, seeing the successes of others, I was like, well, we've got to do this too. So,
wait a second, why are they getting ahead and I'm watching here?
Yes, absolutely. So that's where we got involved in the whole thing.
Love it. I got to tell you, to be completely transparent and honest on this thing, when it comes to borrowing money, I am probably your biggest proponent in the industry. And I say that because once you get your head wrapped around not what comparing cap rate to cash on cash looks like, but that borrowed money over time, the fact that your portfolio could be 3 times larger than your cash, 2 to 3 times larger than your cash. How do you think that looks 5 years from now, 10 years from now? And I know as an investor, as a guy that's bought a lot of property, I know every time I have to do a refi, every time my 5-year term notes come due, I'm taking hundreds of thousands of dollars in appreciation back out that I've made for doing nothing. And that's kind of silently happening behind the scenes. And people don't realize. And the worst part of it is, I think the the pain point for me has been how poorly real estate agents understand real estate. And I've experienced the same thing with the lenders that I work with. There's a handful of them that like get it and understand the power of leverage and how it works, even if the interest rate doesn't look so great and the cash flow doesn't look so great today. What tends to happen to rents over time? What happens to properties over time? Properties appreciate, rents go up. That debt service stays the same. And that is a wonderful, wonderful thing. You get the bank to agree to a certain number of dollars today, and your profit margins go up and theirs stays the same, which means it's unlike the other expenses that you have to bank on them going up with time. This one, you have a fixed expense for the length of time of your loan. So yeah, no, it's really such a powerful tool. And that's why I love having folks that lend money on here to kind of, especially folks that invest, because that's the thing. That's when you start to get it. When you've been investing for a while and you're lending money, you're like, oh, wait a second, I'm doing really well here. It's really putting kind of the money where the mouth is sort of situation, I find. So,
100%, absolutely.
yeah. So, what do you like best about what you do?
I seeing love seeing the clients achieve their goals. So a lot of people in my space, in that short-term rental space, their goal, and it's really kind of shocking sometimes, from doctors to, you know, um, hourly workers, a lot of them just kind of want that freedom. And so for a lot of them, their goal is, I want to generate enough somewhat passive income. We'll be honest, short-term rental isn't completely passive.
Not even close.
um,
No.
we'll call it semi-passive income to quit their W-2 job. So what's been really cool is being able to work with clients. I've got some now that between the two have done 20 conventional loans because you can do 10 each. So in a couple, it's part of the strategy. And I've seen, and along the way, they've quit their W-2 job. So maybe after number 4 or 5 or 6, they're able to leave that W-2 job and really focus on their portfolio. Some of them have gone on um, to do co-hosting or to develop other creative solutions for short-term rentals and kind of running their own business there. We've got one that just created an amazing app to analyze properties. So the favorite part of my job is really working with these people who think, because there's a lot of bad information about lending out there, a
Mhm.
lot of people who think they don't qualify or won't qualify, that are really surprised when we work with them, and they do, whether it's, like, so after 5 or 6, then we're just using rental income if they've quit their W-2 jobs.
Sure.
I don't think a lot of people understand you can qualify to continue to grow your portfolio just using your rental income.
Hmm.
So yeah, so yes, that's what I really love about my job, is just showing people it's possible and helping them get
Yeah.
there.
Or even the income of the asset with DSCR products type stuff, where they're underwriting the asset more than they're underwriting you. I mean,
True.
whatever the difference in interest rate, it's so nice to not have them take the long latex glove out that they do when it's time to do regular underwriting. Underwrite the asset. When I started buying commercial properties, that was, oh, like they didn't even really, hey, what's your credit? All right, you're good. Let's go take a look at the asset, because that's what they care about. That's their collateral, and if they have to take it back, they want to make sure the asset is a good performing asset. So it is different, because I mean the problem really is, I think, that people have just such a we do such a poor job of educating people in general as to how investment works and how underwriting works. The idea of risk return, the investor's looking at it, so is the lender. And so if we find ways to mitigate the risk for them, we can develop an appetite if we find the right lender for the thing that we do, and if the lender has their head wrapped around and has, as I said, an appetite for it. So um,
Yeah.
I want to ask you, what do you see as the opportunity in the market today? And run with that any way you want to.
Sure. I think there's a lot of opportunity when it comes to short-term rentals. I do think that it's going to be important to really research the market that you're looking to get into. I think some of these standard markets, so I'm invested in the Smoky Mountains and the Emerald Coast of Florida. Those are
Hmm.
two markets that are always going to have tourists. It's always going to be busy. The Smokies is like the Orlando of the upper Middle East Coast, we'll call it. Um, but I think there's a lot of opportunity right now, and I think we're at a really good point. So rates have actually started to come down. The last couple of months, there's been a trend. For the first time in 2 years, there's been an actual downward trend for the last 2 months. But I think that we're kind of approaching that sweet spot because prices have also, they haven't exactly come down, but they've stalled a bit, right? They are not at the trajectory they were before. And so I think the next, 4 to 6 months might be a really important window before those rates really become attractive enough for a lot more people to jump in. And then I have a feeling there may be, prices may start to rise again as they were before.
I think that there's really good reasons to think that that's true. I mean, the prices were supported with interest rates where they were. Interest rates coming down is nothing but an incentive to purchasing, and there was already a shortfall of inventory. I mean, I think the one thing that I'm seeing, and I'm seeing it more of an anecdotal basis based upon my real estate business than I am anything that I can point to as far as macro data. But I'm actually seeing some people that were doing short-term rental with their less appealing properties, the properties that aren't the greatest. Those properties are now being put on the market for sale. They want to take and harvest the appreciation they got, which is good, but it's also, I think that's actually what's serving to soften the market. There's this inventory because the short-term rentals is nothing. We don't really track them as well as other stuff that's kind of baked in the cake. And so it functions as almost like a shadow inventory to some extent. It's a second source of inventory because one of the reasons things got so tight is these homes that were either rentals or for sales have now been pulled out of the inventory to basically compete with hotel. And as there was a little bit of a tick down from them, I mean, huge run up at post COVID, people working from home. Hey, let's go stay in the Smoky Mountains for wherever. Let's go stay someplace for months, or go all over the world and just work from wherever we are. That's kind of pulled back some, and so I think a lot of the folks that were like amateur hour short term rental folks have kind of decided to harvest the appreciation they've got in their assets. And so I think that's helping to take and start to restabilize the short-term rental market and get those rates back up. But it's also softened the rental market as well as the for sale market. But I think that's a temporary thing. It's a very temporary thing until that inventory gets kind of consumed up again, because that scarcity that we have is just so massive. I don't know where the supply of extra inventory is going to come from. That's going to take us to an oversupply state so that prices can come down in a meaningful way. I mean, I know when interest rates came down not too long ago, first-time mortgage applications spiked like almost immediately. And you get all these people that really want a bigger house that haven't been getting out of the house they're in because rates were up. Well, inflation just ticked back up again. Is the Fed going to take and be more aggressive? Like, what's going to happen? The FOMO is going to kick in, I think, a little bit. That's what I'm seeing. That's what I'm thinking. But I just tossed that out for you, for your take on it.
Yeah, no, absolutely. I agree with all of that, and here's kind of a notion I don't want people to miss out on as well. So I've had a lot of clients waiting for the Fed to drop rates, thinking that's going to drop mortgage rates. Well, yeah, mortgage rates don't depend on the Fed. Now, what the Fed does affects everything in general, but mortgage rates are dependent mostly on the 10-year Treasury. And so mortgage rates rose faster than the Fed raised rates, and they should also fall faster. So rates have dropped over the last couple of months, even though the Fed has done nothing but pause. So I don't want people to feel safe thinking, oh, I'll wait until I hear the Fed's drop, because no, rates are already dipping, which is very nice and pretty significantly too. I think we're back to where we were like last May, June right now on rates, which is huge. So I don't want people to lose out for that reason. Now, on the short-term rental side, here's another reason right now is a good idea to start exploring. So I'm sure you've probably heard that term Airbnb bust that was trending. There was also some fake report that was out that like revenues were down 50%, even in the Smoky Mountains, which I know isn't true because I live and invest in the Smokies. So I have a very good pulse and I have a ton of investors. I am licensed in 35 states, which means, and the reason I did that was so that I could support my clients wherever they invest, but it also means I've got a good feel for a lot of different parts of the country in these STR markets. And I think everybody was down about 10 or 15% last year. And there's two things I attribute that to. One, I think a lot of people got restless because they couldn't go overseas. So I saw an article about, record travelers going to Europe for the summer. Now, I don't always take everything I read to heart, so I called a travel agent client of mine. Yeah, you can't. So I called a travel agent client of mine who's been in that business for over 30 years, and she said 100% she's never seen anything like it. Europe is packed. Don't go if you can help it. So that was true. And then to your point, on the other end, I think consumers were getting crunched by inflation. So I think you had your kind of upper end travelers leaving the country, and I think you had your lower end really feeling that inflation. So I do think it limited, but I don't think that will always be the case. I think the future is not only are these travelers coming back, obviously, but the ADRs are going to catch up to inflation too. Right now, they're down a little bit just because of travel demand,
Mhm.
but just like everything else, the ADRs are going to increase with inflation, like everything else has.
Sure.
So, yeah.
No, it's, I mean, the wild card for me has, because I mean, you're absolutely right. The Fed raising rates has been a way to take and reduce circulating supply of money. But the other one that's kind of the wild card that I've been waiting to see what the effect is going to be is the student loan repayments restarting again. Because that's another big pull of discretionary spending right out of the economy that it's really unprecedented. It's like 43.5 million Americans that, from yesterday to today, now they have average, I guess, like $501 a month less to spend. Well, what gets hit then? And so, and it's an economy. So the cool thing with economy is eventually it just bakes into the cake. So, there's a tick down or whatever, and then it's absorbed, and we get back to business as usual because this is the new normal. And so the post-pandemic new normal has been like finding where the levels are going to wind up being. But that's the only piece that has me even a little bit. And I've I've been on the right side of this so far. It's always a little nerve wracking making predictions, but I've been like for the first time since I started this business, I've been hesitant on multifamily. I've always loved multifamily. I've always loved long term rentals, and the reason why is because we're seeing short term rental inventory come back into the market, and it's softening rents. We've actually, I mean, Southeast Florida, there's not a city that has been moved to more than Southeast Florida, my part of the country. And even so, my
Yep.
rents have softened in the last 6 months. And so, where did that come from? It came from there's extra inventory coming in the market that nobody really anticipated. But that's like, as I said, that's one of those things that once it gets baked into the cake, oh, this is where we are. Okay, we go from there and we start going back up again. Because the value of money is not going to go back up again, guys. The value of money's gone down. And it's just like I used to watch the Three Stooges with my father, and they'd have the sign outside the restaurant, steak and egg, 15 cents. I'm like, when is the price of steak and eggs coming down? All right, it doesn't. When's the price of coffee? When's the price of groceries? When's the price? Nothing ever goes down in price, right? And so the idea that things are overpriced now, it's just that for the last 50 years we've enjoyed such low, stable inflation that we're not used to the value of money dropping the way that it has, and it's going to be an adjustment for people. This generation is getting to experience what the previous generation from the 70s had to live through. So I think that's everybody figuring out where the new normal is part of this. And I think we're just working our way through it. But what do you think makes you passionate about what you do, Parker?
Oh, good question. Well, I'm really good at it. It's my
That
superpower.
helps.
Um, yeah, well, and that I think that almost drives me. There's not much I'm good at in life. I'm probably a subpar mom. I'm okay at everything else. But when it comes to like, I don't know, like I just get excited about finding solutions and surprising people. I actually enjoy making the process easy. We talked about the latex glove. I really pride myself on not pulling that out, and people are
Yeah.
surprised, like, well, don't you need this and this and that? I'm like, nope, we're good. So I think just being really good at something and being able to see the results of that for people is it's really what drives me. Because I could now look, I have built a short-term rental portfolio. I could quit lending anytime and be fine with our revenue from that. But I love what I do and I love helping others get there. So,
Can't beat that. It's one of the best things in life, right? So, speaking of that, what are you most proud of in business that you've accomplished?
well, definitely are in 2022, we closed 323 million in revenue, uh, helped nearly 600 families accomplish their goals that year. And so, yeah, that was big. I was the number two woman originator in the entire country. number 17 overall. And so that felt really good. It was exhausting, but it
Sure.
felt good. Yeah, I kept telling people I'm going to ride this wave until it crashes or I do. Uh, and it was almost me, but then the wave crashed. Then the rates went up. So.
Rates went up and you went on vacation. That's the way to do
Great.
it. Totally. All right.
Or recovery. We'll call it
Yeah,
recovery.
recovery.
Yeah.
Um, Similar question, but maybe a little bit more personal. Definitely more personal question. What are you most proud of in life that you've accomplished?
Oh, you know, part of me feels guilty for the same thing I'm the most proud of. So I've got two teenagers. I've got a daughter who's 18. She's a senior, a son who's a sophomore. And, I've been a really hard worker my entire life. I've not been the traditional, you know, role of, making the lunches. That's not me.
Sure.
I have a really great husband who's amazing at that. But, so I haven't been able to go to all their functions. I've been slammed, especially the last few years when the real estate market was insane. So part of me feels really guilty for that, but
Sure.
another part of me is really proud. I think my children are both proud of me. Um, Really proud to set that example for them in terms of strong woman role, seeing what mom can accomplish, and I see that in them. So I'm really proud of that for
Awesome.
them.
That setting the
Yeah.
example just makes it so much easier for them when it's time because that's where they came from. That's their heritage, and that's such it's something we talk about on the show a lot. The gift that our parents give us by the example that they set, or sometimes the burdens they give us by the examples they set as well. So, um, what one piece of advice would you give our listeners?
Don't sell yourself short.
Okay.
There, yeah, so many times I come across people who I talk to and they've been wanting to get into real estate. They've been wanting to invest, but they don't think that they'll qualify. So they've been putting it off. And I get it. Sometimes it's a mental block. Like I have a mental block about doing my taxes. Like, oh, so much. I don't even want to think about the first step for that. Um, and I feel like people sometimes feel that way about lending, but you've got to make that call. And if the first loan originator you talk to, because it's not about the company even, it's the loan originator. So I work for Movement Mortgage, but I can do things a lot of other LOs with Movement can't just because they don't know how. So if you don't feel that the loan originator you're talking to really knows how to, because that most loan originators do primary homes, they don't really get into this investment and second home world.
Hmm.
So they don't really know those guidelines because they're not in them every day. So, I have a client who told me I was the 21st lender he talked to. He had
Oh,
almost given up, but somebody said, yeah, someone said, call Parker. And he's like, okay. And he called me and I just knew how to look at his existing rental income that he had and put it all together. And I was like, you're fine. We've closed 10 together now at this point.
yeah.
So that's why I really say don't sell yourself short. Uh, Talk to loan officers until you find one you can jive with, deal with, and are giving you the answers you need to keep going. So that's my number one piece of
Love it.
advice.
All right, so a little bit of a lightning round just to help our folks maybe understand you a little bit better. What one book or movie would you recommend to our listeners? Book
Oh,
or movie, your
gosh,
choice.
that's a really tough one. Book or movie? Okay. Okay. Well, when it comes to understanding lending, I really like, oh my gosh, sometimes things are slipping my mind. The one about the crash. The Big Short.
The Big Short. If you like The Big Short,
Yeah.
you've got to read All the Devils Are Here.
Okay. Okay.
All the
I'll
Devils
have
Are
to read
Here
that.
was not
The
written by
Big,
a.
Sh-
It was written by a bank
okay.
CEO.
Oh, interesting.
Yeah, no, so
Okay.
it's
I will have
written
to
from
read
the
that.
inside out. So yeah, it's a really worthwhile. Gives you a bit of a different perspective than The Big Short. But go ahead about The Big Short. I didn't mean to interrupt.
Yeah. I think The Big Short gives a good insight into what happened then in the industry. So like a lot of the things that you teach and you talk about, I think the Big Short, it also gives insight. So I watched it recently for the second time. It had been a while. And the part that I missed, and because I think to some degree this might be going on now with credit card debt and commercial real estate, I missed the part where after everything started to fall apart, the banks hid it for what, 6, 8 months? They were waiting for their paychecks going, wait, we see bankruptcies happening and foreclosures, you know, why are we not getting paid yet? Because the banks were hiding it. And that
Hmm.
was, so part of me wonders if that's going on a little bit right now with consumer credit card debt, with the rates skyrocketing on that, and then also some of that commercial real estate. So, yeah, so no, that's not really an inspirational movie. That wasn't a good one for that, but for a good insight. And it just helped me understand those inner workings a little bit more to pay attention. I learned.
I always say it's the most expensive bill in real estate to pay. Pay attention. It's a thing. And honestly, I'd rather you not give me a book that blows sunshine up my butt and tells me how wonderful and beautiful I am, because there's a million of those. Give me one that gives me better insight on that what we need to do next. That's what it's all about. Getting that foundation of understanding what happened and why is just so important to moving forward without making the same dumb mistakes everybody else has. And speaking of that, and speaking of history, here's another question for you. What famous person in history would you want to meet and have lunch with if you could? Sit down and have lunch with any famous person in history or anyone in history. Who would it be?
I've actually never thought about that.
Yeah,
Oh man, famous person in history. There's so many.
it's true. It's true.
Yeah.
Well, I don't want to
This
stump
is
you. What
kind
do
of
you got? Go ahead.
yeah. This is maybe a little cliche, but just because of the massive empire that she built and how helpful it's become. Oprah. I mean, Oprah's pretty awesome. I know she's not like a super historical figure, but well, she is. But I mean, just because she really started from the ground in a time where you didn't have social media, right? There's so many social media stores and everything's so much easier now. But just to kind of get a feel for that grit and how she got from point A to where she is now. So
Yeah,
that, I mean, that's the first one that comes to mind.
love it. Nothing wrong with the first answer. Except
Yeah.
tomorrow when you're like, oh, I should have said, no, it's okay.
I
Um,
know it'll come later.
of course. All right. One
Yeah.
more. Who would you want to be stuck in a foxhole with? If you were stuck in a foxhole, who would you most want to be stuck in a foxhole with? Who's the first person that comes to mind?
Stuck in a foxhole. It's really cramped quarters.
Cramped quarters, so probably somebody that doesn't have
Right.
bad breath, but somebody
Right. Right. Yeah.
more somebody who you could trust to have your back.
Oh, that kind of fun. I'm sorry. Kind of foxhole. Ooh, that's a good question. So I'm assuming, all right, I'm going to be totally honest. Is a foxhole war related? I'm not familiar with a foxhole.
Yeah, no, totally. It's a war related. You're in a foxhole, you and one other buddy, and the bad guys are coming. Who do you want that person to be?
Probably my lending partner, Rob.
Okay,
Yeah. I mean,
Rob
my
is the
husband's great. Don't get me wrong. Yeah, but in terms of just helping me fight people off, maybe Rob, or from a
It's good that you put
non-romantic
that in there.
perspective. Yeah,
That's
yeah, yeah, yeah.
probably good that you put that in. All right,
Yeah, from a
totally change,
non-romantic
total change
perspective, to be clear. Yeah, yeah.
for a total survivability stand. Like I got to make it out of this foxhole situation. All right. Um,
Yeah.
what do you do, Parker? What do you do to unwind?
Ooh. I I am a Reels scroller just because I enjoy laughing and I think there's a lot of cute, funny stuff. So if I just need to, and it gives me a brain break, if I
Yep,
just want to not think about numbers and real estate, I really like to scroll through funny reels. That's what I
good
do to
stuff.
take a break.
Nothing
Yeah.
wrong with that. All right, almost done. What is next for you? Obviously, you're a busy lady. You got a lot going on. What's the next project? What's the next thing?
Great question. So we just launched a website and we have created Wealth Builders Mortgage Group powered by Movement. So I'm still under Movement Mortgage. To be clear, I don't want to do a brokerage because then we lose a little control of the process. I like having Movement as the backer, just makes things easier from an administrative standpoint. Um, but we've created Wealth Builders Mortgage Group, and the focus there is really whether it's house hacking, short term rentals, or even a primary home, to help people invest in real estate and create a resource and some easy information for them to access. Um, I also I'll be speaking at a conference February 5th through 8th in Nashville, the Build Short-Term Rental Wealth Conference.
Nice.
And also planning on doing some online classes people can hop in, listen, learn a little bit about lending, short-term rental investing. So really trying to get out there and be a little more public so people can get some great information.
Sounds really, really good. Last question. Where can people that want to find you find you?
Very good. So our website just went live. So
Circling back.
the circling back, yep. The easiest way is if you go to wealthbuildersmortgagegroup.com, then it'll have contact information on that website. So wealthbuildersmortgagegroup.com is a great way to connect.
Awesome. Parker, thank you so much for your time, for coming on, and for dropping all this on us. It's greatly appreciated. And folks, if you need help with short-term rental financing, you got the resource now. This is the person to go to. So from the bottom of my heart, Parker, thank you for your time and for coming on.
Absolutely. Thank you. Thank you very much.
All right, guys, then this is Josh Cadillac signing off for Know Your Shit podcast, reminding you, you got to know what the hell you're talking about. You got to know your shit. Till next time.